This week on the VC React podcast, Saudi's delivery competition is heating up. Jahez and Noon, who used to be competitors, now joining forces. Meanwhile, Shgardi shuts down. Coincidence? Or are we watching the first big shakeout in a market that's going too crowded too fast? What role does government play in this, if any? And finally, DataCamp acquires UAE's Optima for $15 million and makes the founder its global chief AI officer. Is this a MENA Edtech win or another sold too early moment? Let's react. Hi everyone, and welcome to a new episode of the VC React podcast. Every week we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, funds, and investment rounds. Let's jump into it with our guests for today. Amjad Ahmad, Managing Partner and Emerging Markets Advisor at 500 Global. Hasan Haider, Founder and Managing Partner at Plus VC. And my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to the company's websites. Our weekly news is brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we dive in, a quick one. Ever notice how finance teams don't have one right way to work? Approvals in Slack, invoices in email, reconciliations in spreadsheets. That messy middle between contract signed and cash received is where time disappears and money stalls. It's follow-ups, escalations, statements, reconciliations, and awkward nudge that turns into a chase. Most automation tools tell you to change your process to match their product. OCTA does the opposite. It learns how your team already works and makes it faster. No major changes, no heavy retraining. From the minute a deal closes, OCTA's AI agents spin up invoices, schedule and personalize follow-ups, reconcile payments, even surface financing options, then adapt when your approval path changes or those unusual cases pop up. Same process, fewer delays, faster cash. Teams at regional leaders like Careem and Lean Technologies, plus hundreds more across MENA, use OCTA to reduce the "where's the payment" shuffle and bring cash in sooner without forcing finance to work like product or sales. It's the kind of tool that quietly fixes the part of the business everyone tolerates but never loves. A shout out to everyone at OCTA for sponsoring our episode today. Hi Jamie, what's happening this week?
Yeah, Keeta are causing enormous disruption, and Jahez continues to trend the wrong direction, unfortunately,
Wrong
despite
direction,
their
why?
despite their best efforts. The share price reached all-time low last
Yeah.
week. I mean, they've had a string of announcements that, seemingly to try and, rejuvenate investor interest over the course of the last couple of months. The acquisition of Snunu, they announced an investment in Deuce last week, now teaming up with Noon, but none of it seems to be working as far as sort of, stopping that slide. But it's an interesting one. Like, I mean, it seems like consolidation for consolidation's sake. I don't know. Like, it doesn't fill me with an enormous amount of optimism, truth be told. I think if you look at, for the first 9 months of the year versus the past 9 months, profit is slightly down, I think, on that time horizon as well. Now, obviously, they're making investments to bolster the business, but I don't know, things aren't looking particularly rosy. And Keeta are plowing money in. I don't know if anyone else is in a Keeta targeted market at the moment, but they moved into Abu Dhabi maybe 2 or 3 weeks ago, and it's just an onslaught. Like every time you go onto any social media app, it's Keeta in your face constantly. Instagram,
By the way, the
Twitter,
same thing
or
here
X.
in Riyadh. Yeah, it's
Intense.
everywhere. And it's free delivery for all the time.
Yeah, the free delivery has elapsed here, so I've moved back to Careem, and it doesn't really seem like a superior app, at least from what I can see thus far. At least, like it doesn't have it's exclusively free delivery. And look, Henriette, have they extended the quick commerce available now? Ahmad, do you know? I think they were going to introduce that at some point.
I haven't checked yet, but Keeta is all the time in my face.
But yeah, thoughts on Jahez and on what they're trying to do.
Yeah, we always hear about the consolidations are coming in this market. I was expecting smaller players to merge or the big ones to come and acquire them. But this one is surprising. The biggest players in the market are now joining forces. What do you think is happening?
Keeta is interesting because they were studying the region for quite a while before they stepped in. You know, they came in, they explored the market, they looked at potential investment and acquisition targets as well. And in the end, they're just like, look, this is the market we can take. And so I think they realized that the competition just wasn't as solid as people thought. And you can see sort of the ramifications of all of that. I mean, they're bringing Chinese style customer acquisition to a really interesting space. And the Chinese are great at customer acquisition for B2C stuff, whether it's like online gaming or any sort of consumer apps like Temu and stuff. So they're just using that same playbook to do really well in the space that in the region has historically been taken by others. So I think they kind of know what they're doing. Whatever they're plowing into the region is like, you know, tiny compared to their overall balance sheet and P&L, so it really doesn't matter that much. But they're gonna continue, and I think they're not gonna stop until they're number one, and I think they're already there in a couple of markets.
Yeah, I think what you're seeing is the natural evolution of a market where, frankly, from a unit economics perspective, has been quite interesting, right, globally. So, people are going to attack the market, right? They're seeing interesting unit economics, they're seeing growth, and they're saying, why not us? And I think that's what you're watching, right? This player came in very well funded, and now the margins are going to compress. And hence, you have what I would call a defensive partnership in Noon and Jahez trying to defend their respective positions without having to invest a lot of money back into the market. And they're both really not in a position to plow that kind of money into the market. When you look at the funding of Jahez, when you look at the funding of Noon, this is probably a deal that they felt, was the, let's say, most optimal in terms of capex to try to defend their position against a very formidable player. So this is natural. I think we've seen it in other verticals, and probably it's gonna continue, and we're probably gonna see other ramifications of it, as time goes on.
Just let me stay with you for a second. So you mentioned combining capex. This is not easy. It sounds logical, but combining fleets, couriers, and dark stores, okay, sounds efficient, but can food and retail logistics really coexist under one network, or will operational complexity kill that synergy before it even starts?
It's a good question, and I don't think we know enough about what they're doing. I mean, when I read um, the news, it sounded like they were each going to continue running their respective infrastructure. So we have to be careful about what this partnership means. It sounds to me more like a consumer acquisition-led partnership than an infrastructure combination, because as you rightly said, they're very different, right? So that's not how I read this partnership. I think it's more about, can they respectively utilize their existing infrastructures more by sharing data, by sharing customers. It seems that's what it is today, which is probably less complex than what you're imagining. Because what you rightly stated is, I think a combination of infrastructure is probably much more complex than what we can imagine today, and it doesn't sound like that's where they're headed, at least for now.
I think what they're trying to do is play in Keeta's game, because when you look at Meituan, which is the parent company for Keeta, they do all the delivery stuff. So they even have ride hailing, and they have consumer, and they have e-commerce, and they have everything basically under one rule. So I think they're trying to like maybe head off the competition before Keeta starts to expand and eat other people's sort of lunch. But what Ahmed said is right. Like when you look at the results of Delivery Hero and Jahez that are all public companies, and even Talabat, the margins in the region are probably the most attractive in terms of unit economics of any delivery market in the world. I mean, places like Kuwait have like the highest and the best unit economics. Bahrain as well, you know, the Bahrainis sometimes order 2 times, 3 times a day out of Talabat and stuff. So I think it's an interesting leap into the market. And I think Keeta's here for a little while, and I think it's an interesting disruption that they've brought to everyone. No one's gonna rest on their laurels right now, so I think that's gonna be good.
Yeah, I just want to add something. I don't think staying in your lane in this particular segment is going to work, because the reality is that utilization is the game here, right? So I think just doing food and not doing other things, or doing restaurants without doing grocery, without doing commerce, is going to work long term. Because when you have other players who are doing that, their unit economics are just going to blow you out of the water. So in a way, you're forced into this position, otherwise you die. So these guys have to do it. The question is whether this partnership is the right way to do it. My gut feeling is you would have likely have saw an acquisition if the capital would have been there. I just don't think, given the size of these players, that they can buy each other out. Maybe an M&A, I don't know, but the complexity of taking a public company into a private, I think in the region is still a big question mark. But I think you're not seeing an acquisition because of that.
On the ground, what should delivery companies do to fight this kind of competition? Should they focus on, I don't know, the easiest thing that we're seeing today is giving discounts, giving free delivery. But what else can they do? If we think outside the box, what can they do?
I don't think there's much they can do when someone comes in with such a large marketing spend. It really ends up as a price war, right? So everyone starts spending more, yeah, try to outspend each other on marketing, and at the end of the day, it's whoever has the deepest pockets is going to probably survive. And in this case, it's definitely going to be, the Chinese, because their top pockets are much deeper than ours. So I think it's going to be an interesting game to see who's gonna survive. I don't think we're gonna have too many smaller competitors survive. I think unit economics and scale are really gonna be the name of the game in order to really compete in this kind of market. But see what happens. I think for me, it's always a path towards, is there going to be other further consolidation and real M&A and real activity that's going to take place in the region, and that's kind of what I want to see. But like, this is the worst place to like talk about that, because there's already been a lot of mergers and acquisitions, and companies are listed in this space and whatever. Like, I wish there was another company that came in a different segment that could come in and acquire a bunch of other smaller players in the region. There's a huge opportunity for roll-ups in other spaces where there's dominant players in that space and lots of different small markets, but this is probably not the one that I would have chosen to start off with. But yeah, I think it's gonna be really difficult to compete. So you gotta basically survive until you're one of the few left standing, I think, at this stage.
We've seen this, right? Uber and Lyft in the US. I mean, this is what you saw, right? Is that differentiation is really challenging in this space. So it's about pricing. And then once you get scale, then you can, gradually improve your unit economics, right? That's what we've seen with Uber, with Uber Eats. So I think this game has been played before. I think people know the blueprint, which is get scale and then work on your unit economics later. The problem is you have to have the deep pockets to get to scale. And unfortunately, they do. So I think it's going to be very challenging for others in the market, unfortunately, unless you get big consolidation and somebody who's willing to fund. I mean, I think are the sovereigns wanting a local champion? Do they want to fund a local champion? I don't know the answer to that, but it's going to require that kind of capital.
I think when you look at Noon, obviously initially launched with the backing of PIF as well, to an enormous tune of money. And in terms of what you're describing there, I suppose we're seeing a similar thing in ride hailing, definitely in the UAE context, at least, with Bolt now entering the fray. He's seeing an opportunity of smelling blood, and I think the same thing extends to Yango now as well. Is this a situation, though, of incumbents resting on their laurels or being complacent?
It might be. I think that might be the case. I think we've been running under the radar in the MENA region for quite a while. No one's really looked at us too closely for coming into our markets because they've just been small and no one really cared. But I think with the way that the world looks right now, MENA is probably one of the most stable, best markets to be operating in. And so now we're seeing everyone's looking at us. And so if you're not at the global level, if you're, a Series B-ish sort of startup, or you're getting to the $1 billion sort of level and you're not at a global standard to be competitive, once one of these global players comes in, they're going to eat your lunch. So you really need to be on top of your game. I think that's really the warning to be had out of this, is like you've got to have contingencies and war rooms planned, because the guys that you thought weren't interested in our region might suddenly just pop up and be here.
I just wanted to go back to a point Jamie mentioned in the very beginning when he mentioned the stock price. Now, let's take a step back, and regardless of what company we're talking about, a tech company went public. I know as VCs, we focus on the story before the IPO, but the company went public, and now there's public investors, there's media chasing this company and watching price movements. What can a founder do after going public to control the price of the company with all of
You
these
don't control the
competitions?
price.
You,
You
co-
don't.
you
You
don't.
don't control.
You don't
No,
control
you
it.
don't
Of course
control.
not.
You're
But
a public.
okay, let me rephrase this. What can the founder do to protect the shareholders from these,
Performance.
fluctuations?
I mean, it's
It's all about
performance
performance.
and storytelling, right? I mean, so look, performance is important. So you have to continue to grow. You have to continue to perform. That's number one. Number two is you have to have a narrative for the future that makes sense, right? I mean, that's why Tesla trades where it is. It's not because of only performance, but because it has this premium because it's robotics, it's AI. So I think the narrative has to be there and it has to be compelling. It's really important, and probably more so when you're public because your price is a barometer that's daily. So you have to make sure that your narrative works.
The issue with our markets is that they're not the same as markets in other places of the world, right? So when you're looking at the US market, predominant trading and holding is institutional. It's funds that are holding on to it. It's people that are fully institutionalized and focused on investing in companies in the public markets. In the region, the majority of trading happens 90% or so from an individual perspective. So even that was a positive thing when a lot of companies wanted to go IPO in Saudi, for instance. There was a lot of liquidity for the names and brands that people recognize, so there was a premium that was paid at that stage. But the majority of the region is just, it's individual traders. So unless you're able to continue to manage sentiment, like Amjad said, tell the story, it's about performance above all. And the problem is, it's a difficult shift to do when you're a startup founder where you had a couple of investors that you were talking to once a quarter, to now you have the entire universe of the world looking at you, and every quarter you've got to announce everything that you've been doing, and you're kind of, you're living in a glass house now as a company. So before you were okay, like it was, you could do things behind closed doors, but now everything is available to anyone who wants to look at it, and that makes life a little difficult. So I think we don't yet have a lot of people that are experienced with managing investor relations for public companies in the region, especially new and tech related ones. And I think that's a skill set that's quickly going to be very important for a lot of the new startups that have already IPO'd or are looking to IPO over the next year or so. So I think that's interesting to see. And we don't really see a lot of coverage. Like, we don't have a lot of sell side reports on all of these companies. There's not a lot of buy side that's taking place. So like our markets are very nascent. There is liquidity in Saudi, there's liquidity in markets, but like it's still, from an institutionalization standpoint of view, both from the company side and the trading side, there's work that needs to be done. But yeah, this is the trade-off. This is why lots of companies are staying private longer, because they don't want to be living in these glass house where whatever happens, everyone can see, and you have to like defend every little thing you want to do. So, good and bad.
Yeah. Well, this competition is getting really hot and it's affecting, of course, big companies and public companies, but it's also affecting smaller ones like Shgardi. Jamie, what can you tell us about what happened with Shgardi?
Yeah, it seems like the first publicly disclosed casualty in any case of this price war. So they've Saudi-based delivery app launched in 2020 at about 12 million in Saudi Riyal. 7 million orders, 35 different cities where they were present. And yeah, they cited intense competition and market price dumping in a statement when they shut down. So yeah, so look, it's a fall from grace. In 2021, they were exploring some sort of parallel no listing, but yeah, they've gone out of business.
Any reactions to that? We just talked about Jahez and Noon teaming up, but while we're trying to stay positive about consolidation, the reality is that some players won't survive.
It's really sad, like seeing a company that gets to that stage where they're about to IPO and things just don't work out at the end. And unfortunately, this happens. Like, it's, one of the hard lessons I've had to learn is that even when a startup gets to Series B, it's still not, money in the bank yet until you liquidate. And so it just, this is, we will see more late stage companies that are going to fail for a variety of reasons. And I'm sure that it wasn't just the entrance of Keeta that killed Shgardi. I'm sure they had issues with unit economics or things in the past. I don't know. I haven't really looked into the company recently, but a company doesn't die suddenly. It dies over time. And so this is probably was the final nail in the coffin, unfortunately. So really sorry for the investors and the founders that worked super hard to get that company to the stage that it was almost an IPO candidate. But yeah, it's just one of those lessons where even when you're looking, like, this is something that's really interesting. There's a lot of people that are looking at pre-IPO investments in Saudi, and I was like, yeah, that's still not a guaranteed deal. So that's something that's interesting. But in other markets, I don't know what's going to happen. We'll see who comes in next, and then we'll see who can survive or not. But for a more positive spin, you had companies like Careem and Uber came into the market, and both did really well. So Careem was able to hold their own. So it's not necessarily a case of anytime a global entrant comes in, the local players are going to die. So I wanted to make sure that positive spin was there in this episode as well.
Hassan, I'm really worried about fintech companies, fintech startups, because so many investors
No,
are.
I think there's going to be death in fintech companies regardless. Like, there's too many people like doing the same thing. It's all stupid. Some of the founders are just jumping on the bandwagon. I was like, why are you doing another buy now pay later company now? Like, what's and why would anyone be investing in another buy now pay later company? I was like, dude, there's like two large players, and then the global players are going to come in, and like, what are you even doing? So no, there's going to be a lot of these seed and Series A-ish fintech companies that are just not going to survive. So survival of the fittest is part of our job, I think, as VCs, though. So gotta keep that up.
Look, I thought that announcement was, I hate to say it, but I think this is positive in a way, because we it's part of the market, right? We're gonna have deaths. We use the word nice consolidation. It sounds so nice, but consolidation means some companies die, right? And there's rationalization, right? So I think this is healthy. We need that. We need sort of sectors to develop and for companies to fail. And honestly, I would applaud the sort of the public nature of this, that it happened publicly. A lot of companies end up dying and we just never hear about it, right? But I don't think this is some anomaly. I think companies die, and this was just a little bit more public, and it's a healthy part of the development of that sector. I think you mentioned what other sectors, we should see something like this. I think, you mentioned it, right? Fintech, I think there are a lot of similar dynamics, right? It's a volume game. It's some of it is small margin. You need very high volume. So you'd like to see some consolidation in that industry. You'd like to see companies sort of go from one product to multi-product. in fintech because that's how you sort of get more share of wallet, you improve your economics. So I frankly see Tamara and Tabby accelerating M&A even after they go public. Both of them probably have the same goal, which is to eventually become close to neobanks as possible. So they should be doing more. Anyone who knows financial services knows that banks make, little margin from multiple products, a lot of cross-selling, and that's what these guys are going to have to do long term. So I think you'll see more of that, right? We have a lot of SME lenders coming up. Not all of them will survive. It's a balance sheet game. Can you get the financing? Can you get the financing at the right cost of capital to survive? So I think you'll see a lot of fintech failure. You'll see a lot of fintech consolidation as we move forward. But like food and food delivery, we're going to see a few winners in that vertical.
I want to talk about the government. Is there any role for government to play in this? Many government are trying to support local startups, local VCs, and try to protect them. Is there anything the government can do, if the government should do anything, to protect local startups from the predators coming from outside?
So I studied economics, right? So that was my university degree. And so whenever anyone mentions protectionism, I'm like, no, don't do protection. It's bad. Don't do that.
The US does that now.
Yeah, no,
The
even
US.
like every time protectionism hits it, raises its head, you know who suffers? Everyone suffers. So that's the thing. Like consumers will suffer because they'll be paying more money for worse quality products. So all of us are going to suffer. The economy is going to suffer because you're going to see stagnation and there's not going to be any growth. So as an economist, it's like, why are you bringing protectionism back into these markets, right? And you just can't get to scale if you're just in a small market. And so yeah, I hate that, but it's it's just like ingrained to me after 3 years of university. Is like, don't protectionism is bad. It messes up the lines, the demand supply and all that sort of stuff.
Hasan, you're against tariffs, of course.
Yeah, of course. And it's
Okay.
like, oh, you look at it, you're like, what the hell is going on in the world? So it just, I think more people need to have economics degrees at some point. Like, it would probably be useful. The thing is, when you look at it from a government perspective, politically, it's always easier to say we're going to protect our local industries. But you have to have a very defined exit path towards that protectionism. For how long are you going to protect these? What is the ultimate objective of protecting the local industries? Will you be giving them targets and things that will get them competitive by the time they end this protectionism? So you can look at markets. The interesting one to always look at is the car market, right? So there was various successes and failures of protectionism within the car development industry, and so you have successes in markets like Korea and China where there was a lot of protectionism, but it got the cars to a global scale, and then they started to really export and stuff like that. And there's others, unfortunately, like in Malaysia, where their car industry did not do so well because of the protectionist measures that were in there. So I think it's like, if you're going to be protectionist, what's the end game? Like, is it just to protect a small business in your market? Then don't do it. But if you're like gonna help scale and grow a new industry in your market and then have that go global, maybe it makes sense to give them a bit of time to really gestate and build. But most situations of protectionism end up with worse quality products at higher prices for consumers and worse service and whatever. So in every single way, protectionism doesn't really help us. So I don't like it.
Yeah,
Sorry.
Amjad, what do you think?
Ahmed, your question, I would break it down in two different ways. I think protectionism is not healthy, right? We want very competitive companies that can operate on a global scale. We want, best practices. We want them to be sharp. However, we cannot deny that there are governments all over the world, including the US and Western countries, that help their industries, right? Tesla would not be Tesla today if it wasn't for the US government. And giving a 7,500, tax break for EVs, right? I could name other industries, right? There's subsidies all over the place for local industries. So I think, giving local industry a leg up is fine, as long as it's done pragmatically, as long as it's done in a way where you're not choosing winners, you're letting sort of competition breed, and you have a level playing field for everyone, right? I think that's healthy, right? But there's no denying that almost all over the world, you know, governments do help their local industries. And I think where we can be helpful to technology is definitely bringing down barriers, which I think countries have been doing. Some countries better than others have been doing quite well. I see some of the competitive pressure that our local startups have against, internationals is purely funding. We just don't have that level of funding that some of these international guys come in with. We're talking billions of dollars, right? We just don't have that capacity. Our companies have not been funded to that degree. I think somebody brought up Uber and Careem. I can make the argument that if Careem could have raised $1 billion, $2 billion, maybe they would have stayed private and not got taken over by Uber. But the reality is they couldn't. They struggled to raise, I think the last round was a few hundred million. Could they have raised $1 billion? Highly doubt it at that time. Could they have raised it and compete effectively against Uber? I would argue yes, because they've been doing great localization. They were competing very effectively. Maybe they could have done the super app a lot better. So, you know, for me, it's protectionism is one thing, and sort of helping your local industries is something completely different.
I kind of agree with that. There the biggest issue we have as an ecosystem is the lack of funding, and I think that's just an overall issue, right? So this year
Yeah,
we're on track to have what, like $4 billion of funding, I think is what the target is. $4 billion of funding for the whole of the MENA region, 16 different countries, big markets like Saudi and Egypt, all lumped into that 4 billion. You look at the US, it's like 200 and something $1 billion is being invested in that market. You look at China, even after a 90% decline, it's still much, much more than, like, it's multiples of what we have. So I think really the issue is that we don't have funding in our region to get to globally competitive companies. So even if you do put in some protectionist measures to support your companies, that's not really going to solve anything because they won't have the money to be able to get to scale. So I think you're right, Amjad. I think that's probably the biggest issue that we have in our region is just the lack of funding. And it's not a lack of funding that needs to be solved by the government by them putting in more money, but it's a way to incentivize more private sector investment into our local venture capital ecosystem. When you look at how much is being funded in VC funds in the US from the region versus how much is funded from MENA VC funds from our region, like most of the funds in our region that are raised $100 million plus, they've had to raise from outside the region because we don't have an LP base here.
absolutely.
So I think that's what we need. Like, if you really want to build globally competitive companies, the funding is probably the key issue. And in order to get that funding is to incentivize the private sector, the pension funds, the other pools of capital that are available in the region to invest locally, I think probably is the best way to do it.
But Hassan, just quick question on that. Like, why wouldn't we want a PIF for Mubadala to put in a $1 billion check in Tabby today or tomorrow to say, go compete, right? Like the reality is they do it with global players. I mean, they're doing direct investments all the time
I
in
think
startups.
there is a case to be done there, but I think the issue is more of a ecosystem level issue that we just don't have funding that's taking place in the region. So I think my concern with government always doing direct investment is that there's always issues related to that. There's politics, there's preferential treatment, and
Sure, absolutely.
if you have a single, like, the only person that you can ask for money like that is one guy, if that person tells you no, then that's it, you don't have a chance to survive. So it's always better for the government not to be the one that's directly investing, but to enable an investment ecosystem that allows there to be multiple funds that can do 100
Fully
200
agree.
check. So
No,
I
no, no. I fully agree about that. I guess my question was different, which is because we have a very unique construct in the region, right? Which is we have these sovereign wealth funds that have massive amount of investable capital, right?
Yeah.
That now they're starting to deploy directly into startups, right? So why not invest directly into our champions?
Because I'm not
If
so
we truly believe that they're champions and that they can
I
compete on a
mean,
global level.
I agree with that, but I don't agree that the decision making to find out which those champions are is going to be in the best interest of our region. That's always my concern, is that
Yeah.
the politics and other crap that comes into play when the government is the one that's signing the check is something that we probably want not to impact the success stories in the region as much as that. Like I would we're probably a step before that right now. How many growth funds are there in the region? There's like 3, 4 that can
No,
deploy.
we definitely don't have enough growth capital. That's
Yeah.
100%
Amjad, to your point,
correct.
I'm not sure if they should invest, these big checks into the companies directly, into those champions, because they're already exposed to these companies through the funds they invested in, and they wanted to diversify, and they're investing regionally and internationally as well. And we've seen them invest big checks in, the Claude and some other companies. So if I want to put myself in their position, I would like to diversify. Maybe, yes, one or two big winners would take a big check from me, but I'm already exposed to all of these companies through the funds I invested in.
Yeah,
So
again, I'm not suggesting what the direction that you're saying. What I'm saying is I see PIF, I see Mubadala, Adia, all these guys investing in, let's take Adia for example. They invested a huge check into like Lenskart in India directly.
I sort of,
Why
yeah.
why why not invest in Iowa directly? Give Iowa $500 million and say, go and win the market. What's wrong with that? Like, I think what I'm suggesting is, you know, they, again, it's a unique construct to our part of the world, which is you have these pockets of very sophisticated private investors who do write direct checks. So I'm not suggesting make a governmental decision. This is an investment decision to say Tabby is a world-class buy now, pay later company. It has better unit economics than Affirm and Klarna, right? Why not give them $1 billion and say, go win the market everywhere?
Yeah,
Take
I
5 billion.
I would
That.
agree with that.
Yeah.
I would definitely
That's
agree.
what I'm saying.
Yeah.
Yeah,
Iowa, I know the Iowa guys personally.
yeah, me
Some of the
too.
best operators
Food
I've ever
industry.
met.
Yeah,
You know them,
Yeah.
Hasan. Some of the best operators
they're
I've ever
great.
met, right? I've known them since day one. Who's to say that they cannot run an eyewear company that is across emerging markets?
Yeah,
I
I
I
agree.
would argue they can.
They could.
Give them $1 billion to do it.
I
That is not happening.
that
That is
that
not happening.
That would I would definitely agree with that. And like when
Okay.
Ahmed actually triggered me with something where it's like, oh, they're investing these billions of dollars in single companies. I was like, oh yeah, I hate that thing. That's annoying.
Yeah.
Like why are you like? Because
But
every time I hear one of these announcements where they're putting in like $1 billion into a company, I was like, wait, the whole regional ecosystem is $4 billion. Like,
correct.
Yeah.
you know,
Correct.
uh, like
Correct. By the way, a
what?
billion is small. We've heard bigger numbers, right? Like
Yeah.
Yeah, exactly.
OpenAI and
The
and
$10
all of
billion
that.
dollars into a company
Right.
outside, and I was
Correct.
like, we
Correct.
need that money here. Like, there's
Imagine if
Correct.
that money is invested in VC funds, that would, create multiple
I would,
growth VC funds. That, yeah.
yeah,
But
I
anyway,
would.
we can talk about this forever. For me, I struggle about this because basically what defines a local company? Like, we started this whole conversation about protecting local companies. But for me, it doesn't make sense, because what really defines a local company? Is it a company started by local founders, national founders, or owned, or where local VC funds invested in the company? But now today we're seeing companies in Riyadh and in Abu Dhabi, in Dubai, in Qatar, where the founders are from Europe or America, and we ask them to come here, start the company in here. So
Not
what is a local
that's not a
company? I
local.
don't know. Hmm?
I can't tell you what is a local company, but I can tell you what's not a local company is the people that fly in and they're like, oh, if you invest in me, I'll set up my headquarters wherever you want. So anyone who tries to pitch me that, I was immediately, I'm out. Like, forget it. It's not interesting. And so any of
I'm
the
not
guys that are
with
flying in,
localization or
no.
nationalization of startups. I'm
So
not with that. But I'm just questioning the definition
no.
of a local. If a local company got acquired by a global one, is it still a local company or it's a global one now? The majority of the
So I don't know
employees
what the
are local.
definition of a local. I don't know what the definition of a local company is. I think that can be really broad, but I know what the definition for me that is not a company that's investable for me as the MENA VC fund is these guys flying in and saying, "Oh, we're trying to raise our Series A. We'll re-headquarter to Riyadh, we'll re-headquarter to Abu Dhabi or whatever you give us money." Like that bullshit does not fly. But that I can tell you for sure, Ahmed, that is not in my definition of global
Okay, makes
a
sense.
regional company.
Makes sense.
So as long as it's not that, these guys that are trying to take advantage of us, like okay, anything can. If it's someone that's actually genuinely from somewhere else, living here, building a company here, I can respect that as a local company. But these guys, and we're seeing a lot more of them fly into the region because they think they're like the streets are paved with gold. It's not. And when, like I was at a conference and I was talking and suddenly the faces just changed when I was like, guys, the people that are coming in from India or the US to here to fundraise, let me just give you the stat. And I told them how much funding is taking place in the region versus in the market that they left. And it was like someone slapped them on the face. Like it was literally that. Like that was kind of the reaction that I got. So that those are not local companies. And unfortunately there's more.
So we have Jamie here. Jamie lives in Abu
Hey,
Dhabi.
Jamie, what's up?
So
Jamie's a local.
if he starts a company, is his company considered a local company or not?
I think Jamie would be considered a local company because I love Jamie a lot. So that's
But
basically
That'll
Ahmed,
do.
Ahmed,
no, no.
what's behind your question? Like, why is that important? Like, what are you trying to get at?
When you live in a country like the US, I lived in the US for 10 years. Those
Right,
definitions disappear. Like
right.
if you're in a place that is international and anyone is welcome and anyone can start a company and raise money in that country and target the world, then those definitions of local, protecting local or national identity or the national startups or all of these programs will eventually disappear. And if you take that experience and come here and try to compare between what's happening there and what's happening here, you see that, oh, I'm only investing in companies started by Saudis or Qataris or Bahrainis or Jordanians or Egyptians or companies that live here or target the region. I understand targeting a specific market, that's fine. But the nationality of the founders, I don't think it's relevant anymore. That's the whole
The
point.
nationality doesn't
Yeah,
matter at all.
it doesn't matter.
It's not nationality. It's about commitment to the region. So Jamie lives here. So Jamie's already here. He's spending time in the market. He's understanding what's going on in the ecosystem. If he starts a startup, I would consider that a local startup. But the issue that I have is these guys that are literally flying in and they're just here to try and I think they're mostly are con artists actually. So these con artists that are flying in, just trying to raise money because they think we're stupid and like, oh, we're a U.S. startup. Like, then there's 400 funds in Silicon Valley. Why are you coming here to raise, right? So it like that's the thing. Like those, in my definition, are not welcome.
To me,
But
that's adverse selection, by the way. If I see a US startup trying to raise money here, I automatically say no.
no,
Because why would you come here when your market is the most liquid market in the world for venture capital? It makes
exactly.
no sense. It makes no sense.
So that's the
It-
thing. Like
it-
what Amjad said, it's
yeah.
like this just makes no sense why you're coming here to take money from us. Like
All right. No, Ahmed, look, I think it's what to me, the way I approach your question is not about local and international. It's about, what are they doing and what are they investing in the market, right? And what are they extracting from the market? To me, that's the key word, extraction, right? And if they're here and they're investing and they're growing the market and they have local employees, and I don't mean local as in like Arab or like people who live here,
Yeah,
contributing to the economy, advancing knowledge, that's a local company. It has local everything, right? So I, I- I'm not
I
too
fully
worried
agree.
about
I
local
fully agree.
international.
Yeah,
You know what I mean?
fully agree.
I think I think when you see companies who are predatory, who are just here to like extract, which I think is what Hassan is getting at, is just literally like, hey, I'm gonna put two people in Qatar and extract the money and do everything outside. That's not adding any value to the region, right?
Yeah,
So I think substance is key, right? Like, what are you adding to the region? And look, we don't have to talk about tech here, right? Like, there are companies who have been here forever, like PepsiCo, right? Or all these like big internationals, P&G. I would argue they've been adding a lot of value to the region,
definitely.
right? They have manufacturing, they have sales. People have left them and started new companies. It's helped the economy for sure. And
Yeah.
to me, that's what it's about.
Okay, so we're out of time, but we still have more stories.
Yeah, we'll do Edtech. I know your feelings about Edtech generally, Hassan, as well. So
Yeah.
I'll be keen
I've
to get
spoken about it certain times. Right?
you put your thoughts out into the world. Let's chat about that because I think it is pretty unique. So this broke last night. DataCamp have acquired Optima. That they've disclosed the amount as well, which is pretty cool. So $50 million deal. I'm led to believe that's a combination of cash and stock, as far as I am aware. Pretty nascent company, all things considered, although used by some heavy hitters in the ecosystem, founded by Yusuf Saber. Um, in terms of I've requested information on the cap table and I've received it. So Kotu with the first check there. So they have raised a 1.1 million seed round with a couple of angels in the mix too. Yusuf is going to be joining DataCamp as their chief AI officer moving forward. But look, it's an interesting outcome. Very early, one could argue, in terms of I was about to say jumping ship. I think that's very unfair in terms of the company being acquired. But on one level, I think it makes a lot of sense. I think there's a lot of alignment with DataCamp in terms of what Optima offers from the sort of AI sort of learning engine perspective, and what DataCamp needs. And there's quite a good podcast that the founder of DataCamp and Yusuf have done as well, where they go into everything in much more detail. So recommend checking that out. We might link that in the description.
They're basically the same company. Like I opened both websites, and their offerings are almost similar. So are they buying the team? Is it an acquihire, or are they buying the customers? Because you mentioned, Jamie, that they have big names as customers, right? So what do you think, Amjad, Hassan? What's happening here?
I think it's a good exit for the founder. Like the thing that I don't like is a lot of people think VCs are like, oh, we don't want founders to sell early. But actually, you know what? I'm not in that school. If someone has raised a little bit of money, they can return a good return to their investors, 2x, 3x in a short period of time, and they become a millionaire. I'm totally on board with that. Like I have no issues with people exiting early. I think one of my best exits was a deal that we were in for less than a year, and it was a small exit, but we did well. We did 7x on that. And so I think it's fine. I think, as long as you're not screwing over your investors and everything's above board, I think you're okay. The situations where the smaller exits are screwing over your investors, you're getting rich at their expense, that I don't like. And it doesn't seem like this is the case. It seems like this is all above board, and it seems like a pretty straightforward transaction, and they wouldn't announce it if they were screwing anyone over. So that's actually a very good thing. But I think, yeah, early exits are fine as long as everyone's okay and happy with it. Like, go for it. Like, exit at 20 million and 15 million and whatever. We're good with that stuff, and I think it's good. Like, it's good to see that there's interest in these sort of acqui-hires in the region from people that are outside the region. So I'm pretty happy to.
And
I hope we
and
see more of
he's becoming chief AI
this. Is
officer,
great, which
and
is
he's
amazing,
staying in Dubai. So
which
they
is
will be
excellent.
hiring
Like
more people in Dubai.
all of the above are great things. I think it's
Yeah.
a really positive story for founders. It's a positive story for our ecosystem. I applaud them on being able to pull it off. So great.
Amjad, what do you think?
Yeah, but look, I think this one is probably driven by the dynamics of that sector itself, right? And especially the AI part of that is that segment is moving so fast. And I think a lot of founders are realizing they're starting things and very quickly realizing that if they can't raise the requisite capital to continue to scale, that consolidation early makes a lot of sense, right? It's just one of those industries that I think you're going to see a lot more early stage consolidation. And look, if the founder is sort of smart enough, and this is where I think as investors, sometimes you have to listen to the founder. They understand the sectors better than we do, right? They're in it every day sometimes. And I think this is clear that this founder said it's better for me to fight this battle together with another company than to do this on my own. Whether it was like I won't get the funding or whether the tech was moving too fast and it's better to consolidate, it's obvious that his narrative was this is a better story for me and for the investors to get out of this. So I think it was a pragmatic thing to do. We recently had something like that with Play AI that was acquired by Meta. They could have continued to build, but they realized that in terms of funding, in terms of compute power, in terms of the complexity of AI moving forward, customer acquisition, it's better to take the money off the table, join forces with Meta, and continue to scale, right? And it was a good outcome for everyone. So I think you're going to see a lot more of this, especially in a fast-moving space like AI.
So let's very quickly talk Edtech. I know, as Jamie mentioned, we have the biggest fan of Edtech in here, Hasan Haider. No, he's not.
No, the thing is that I want to love edtech. That's the problem.
Yeah.
That's what makes me upset. Like, I think there's a lot that can be done with technology in education, because education is been done almost the same way for the last 150 years, thousands of years. Kids with a piece of slate or a piece of paper or whatever, they've been doing things the same way over and over again. So there is definitely a disruption that needs to be had in education as a whole. So that's like my mindset is I think there's an opportunity there. I think technology should play a role. But then every time I've done that investment, it's like the reality of the situation sets in is like people who run schools don't want to use technology, and if they do want to use technology, the cycle to sell to schools is once a year during the summer. If you miss that, then you're not going to scale, you're not going to get a new customer on board, and the sales cycle is so long, the customer acquisition takes forever. If you're going after individuals for edtech, it's such a unit economics just haven't worked in our region. So
Oh, wait.
like
In this case, Edtech here includes training employees. It's not just schools and education, right?
Yeah, but even training employees, like the sales cycle for stuff like that with HR teams and stuff is just ridiculous. We've seen a bunch of startups that are trying to do that as well. They'll get to a decent respect. Like that's the issue. Like early signs of traction look good for all of these companies. You're like, this is great, growth is there, numbers are good. So let's do it. Let's do it. This one's gonna be different. As a VC, you have to be an optimist. This one's definitely going to be different. So you're like, it's a different team. Everything's different. The market's expanded. And then it's the same story. They plateau at a certain point. Sales doesn't go anywhere. They hit it like that level where $2 million in ARR, and then things start to decline again. And I was like, shit, I saw this
I,
once before. I should have, you know.
Yeah,
So
you know
that
what? For
I'm
me,
very lucky.
yeah, go
I'm
ahead.
very lucky because I do growth. So they never reach the stage where I
they
invest.
don't
So
reach the stage.
thank you,
They hasn't put
Hassan.
any money into
So,
them.
so
Like over
I
and over.
so I want to thank Hassan for taking the risk and helping me avoid it because they plateau. So I never have to really look at them. So
You
thank
know
you,
what?
Hassan. I appreciate
You're
it.
For me,
welcome.
I really thought that AI will help edtech
No,
companies.
no, no.
But yeah, if
It's
AI,
gonna
AI
hurt.
can personalize every lesson and every quiz and every
but that has
explanation,
nothing to do
what
with it. It's
counts
not
as an
about
edtech company anymore? Yeah, exactly.
about the tech. It's
It's
not
not
about
about
the tech. It's about the industry that you're selling into. So I've seen amazing technology that'll make learning so much more fun, make it much better for kids. Like all of the above, technology can make education much better. Like I love that. Like it's a great thesis. But then you start selling into the education industry, and that's where things go wrong. And so it's so weird. And the worst is if you try to sell to universities. Good luck, like figuring out that whole mess of
Well,
politics.
is it part of the complexity also that governments are investing a lot of money also in technology for their school systems, and they just basically give it to them, right? So I think that's been a challenge as well, is that you have sort of very low cost or free options for a lot of these schools, depending on which vertical you're looking at, that they're able to access. And I think that's going to continue because it's one of those sectors that's extremely sensitive at a governmental layer, at a societal level, right?
Yeah,
So
what I've seen is unfortunately like you'll see early signs of traction with a single government using technology for their
yeah,
school, which is
yeah,
great. I think, oh, that's amazing traction. Like, can you sell to more governments? No, it never happened.
no,
It just
exactly.
it's like that government likes you, the others don't like what you're doing. They like someone
Yeah.
else, and they'll just use that guy. So like the borders around government
Or
schooling.
somebody's cousin owns that company, so the government gives them that contract.
Corruption.
No, it's not even that. Like it's just like we like this company more, and so we're gonna
Yeah.
go with them. And so I've never experienced that cousin thing yet. Not yet, but it's mostly just like who is talking to the government first, who's able to sell their product, who's able to localize it to that market first, and then that's the person that they stick with. And it's such a sticky market that changing any of these systems is like ridiculous. So, unfortunately, I have a reputation that I don't like edtech, but that's not actually the case. I love edtech. I want to invest in edtech. I don't like selling to the education system. So that's just to clarify. That's
He doesn't like the customer.
I don't like the customer. I don't think the business makes sense. That's the problem. Like
I can
show
just
me
edit
that.
get on
But
board
this.
with that. Yeah.
We'll edit this
the
to make
problem
you seem like you said something else anyway, so it's okay, Hassan. We're gonna chop out any of this qualifying nonsense. That'll all be removed. So don't
that's
you worry
all gonna
about
be
it, my
removed.
friends. Okay.
Yeah, no worries. People will still think that I don't like edtech. So
Oh,
that's
you
Okay. Is there anything
uh,
else you want to mention about this story or the other stories that we talked about?
no, I think this is all great signs of our markets maturing.
mm.
Global competitors coming in, it's great. Of course, not great for some, but in general, it shows that we're reaching that maturity of a market that people are looking at us. Smaller acquisitions taking place are great for a maturing market like ours. I think everything that we've seen, even though it could be taken from a negative concept, are I think positive signs for overall economic sort of development as a region and the tech and startup ecosystem just growing. And I think we're going to see a lot more of that maturity setting in over the next few years. So I'm excited about that.
Yeah, the only thing I want to add is and this is not particular to the edtech, but the fact that M&A is happening is really key, and I think we're missing that, right? I think part of the reason why the region I think is very challenging from an LP perspective is this exit issue, right? And I think we need more robust M&A market. The reality is IPOs are very sexy, but that's not the primary exit market when you look at more mature markets. It's really M&A where you can, sell small companies, medium companies, and large companies. And we just don't have that kind of activity. And I think that's what we need. And we need to incentivize more companies to do M&A locally. We need to incentivize more companies to do it regionally. We need to incentivize more international companies to come. And I think that's where government can play a role, is those incentives to make M&A more vibrant in the region. And I would love to see more of this. These smaller companies and medium-sized companies get picked up. I think it's really healthy for our ecosystem.
Just one point on
Mm.
Optima as well. I think it is great that it's a company being acquired not for just its content or for its distribution. It's actually for the tech as well, which I think
Right?
is pretty awesome. I think they're going to be rolling that engine out across DataCamp's offerings throughout the entire world. So I think that's pretty cool as well.
Absolutely.
It's time to thank the sponsor. A big thank you to OCTA for making today's episode possible. If you're tired of chasing payments, fixing invoice errors, or wondering where the cash actually is, you need to check them out.
They help you get paid faster, access financing when you need it, and automate all the messy parts of receivables that no one really wants to deal with. They're already working with over 800 companies, and for good reason. It's one of those tools that quietly makes your finance ops work. So head over to weareocta.com, that is WEAREOCTA.com, and see why so many businesses are switching to the modern way of getting paid.
Yeah,
With
great
that, thank you
company.
so
I'm
much. Great company.
not
You're
We're
an
biased.
Octa.
investor, yeah?
Yeah, John's a good guy. Oh, are you, Hasan? Okay, there you go. Got a nice plug.
We are also invested in Sadu Capital, so
Okay. So,
Great.
yeah.
okay. Well,
Well,
listen,
with
if it
that,
gets good, let me know because John's a good guy.
yeah, it is good already.
I know. I just had a chat with him actually. He's a really
Yeah.
nice guy, great guy.
With that, thank you so much, Hasan and Amjad, for joining us today. We would love to have you again soon. And thank you, Jamie, always for bringing us this news.